And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. The ETF world in 2021 dominated by three topics. We talked about these endlessly. First, crypto and the hope for a Bitcoin ETF. Second, ESG. And third, thematic tech as Cathie Wood rose to superstardom. Inflows hit historic records. Likely, we are close to $1 trillion in inflows this year for ETFs. That's incredible. Total assets under management now probably not far from $8 trillion. So what's going to excite ETF investors in 2022? Let's talk to a man I call the master of thematic tech investing. That's Jay Jacobs. He's the senior VP at Global X, along with Alex Shepard from ETF Action, another ETF expert. Jay, you know, I look at the ETFs with the biggest inflows in 2021. I see Global X's fingerprints all over them. Your infrastructure ETF, your lithium and battery ETF, uranium surprise, cybersecurity, all inflows here, 800 million, 3.5 billion this year. I know it's early. What are you seeing, if anything, that is exciting investors going into 2022?
But we like to look at this concept of inflection points where you're seeing several macro trends combine to power a theme going forward. Right now, we have low interest rates, which make it cheap to borrow. We have rising labor costs, which is making labor more and more expensive. And we have disrupted supply chains, which is making people want to move their manufacturing and logistics back to the United States. All of that is setting up for a huge surge in spending on robotics and artificial intelligence this year. This is a theme that was very popular in 2017. It hasn't been as much in the limelight recently as people focused on electric vehicles and infrastructure development. But we think robotics and AI will be a key theme for 2022 as we deal with disrupted supply chains and rising labor costs.
I want to talk about robotics, but can you explain why uranium had so much in the way of inflows? What is it thematically that's attracting people to uranium?
It's a play on climate change. As people look at different sources of carbon-free power, they look at wind, they look at solar, and increasingly nuclear power is a key piece of baseload energy production, and uranium is that key input. So people are thinking creatively and broadly about how we're going to reach net zero emissions by 2035, and nuclear is a key piece of that.
Thank you. That helped explain that. Now, yeah, Alex, I hear all this great news. We're hearing about record inflows in 2021, depending on who you ask, 800 billion to 1 trillion. Yet most of this 1 trillion in inflows went into plain vanilla indexed ETFs. The S&P 500 funds had big inflows. NASDAQ 100 triple Qs, Russell 2000 had big inflows. I see less than 5% here went into crypto, ESG, and thematic tech. Those were the big three we kept talking about. So what does this mean? Is it good news or bad news that the average investor seems intent on buying the broad market rather than picking winners or losers?
Yeah, Bob, I believe that Jack Bogle and all of us is applauding those statistics. And I certainly wouldn't classify it as bad news. And the core beta portfolio is still on top when it comes to asset allocation and building that core portfolio. The data makes that abundantly clear, but that doesn't mean that themes still don't have their place. You know, these types of strategies can provide investors with exposures and growth opportunities, satellite positions that one wouldn't necessarily find in their traditional core portfolio. It helps tell a story about what that investor believes. So, yes, we continue to see the majority of flows moving towards these cheaper beta alternatives, but we're still seeing some flows into these satellite positions.
Yeah, you know, I wonder, Jay, what do you make of these flows? You've followed this business for a long time. I mean, I was obsessed, as everybody else was, with crypto and the failed or inability to get a Bitcoin ETF through in 2021. I was obsessed with ESG, too. I was obsessed, along with you, about thematic tech, the big three. But if you follow the money, it really looks like investors are primarily focused on long-term investing in broad index funds and not on the shiny new objects.
Well, these things take time. Thematic investing is still relatively new to a lot of ETF investors. We've seen about a third of thematic ETFs on the market launch in just the last year and a half. If you look at the crypto space, these are brand new products with only a couple months of history. So while the flows are still low in the relative sense compared to the S&P 500s, the NASDAQ 100s, we've actually seen very quick uptake of these funds. And I think as we look forward, we're going to increasingly see crypto and themes being a key piece of people's portfolios, maybe anywhere from 10 to 20% of growth-oriented portfolios going forward.
Really? You know, I want to go back to the robo because that was really hot, right? So I wonder, a few years ago, I wonder if the right time to look again is when the public has kind of lost interest and they're distracted by some new shiny object like ESG, for example. So you had that robotics ETF, robo, right? And that was hot for a number of years. It kept going up, attracting not only the prices go up, but inflows kept going up. But has it attracted a lot of interest lately? Is it worthwhile being on the lookout for themes that are not as popular as they used to be, but are still out there at this point?
Well, it's important to try to anticipate the changes that are happening before the rest of the market has picked up on it. And when you look at something like robotics, yes, it has had a fantastic growth story already for the first 5 years of our fund's history, the fund BOTZ, bots. And what we've seen, though, is that it's been a little quieter. People get distracted by some of the other themes that are getting headlines. I mean, mobility, Elon Musk is man of the year, so everyone's talking about electric vehicles. They've been distracted from, another very powerful theme with robotics. And I think it behooves many investors to be early on that trend as we see it accelerate in the coming year.
Yeah. You know, another way to look at this, Alex, is the flows into passive or index ETFs and active. Put up this chart here, guys. It's 90% passive and index, the total flows. Now, I know, of course, a lot of ESG flows and a lot of thematic flows are pegged to indexes. But we've been told about the rise of active for years. I mean, look at this. This is only through December 8th, you know, almost 740 billion into passive, 73 billion. I mean, that's 10 to 1 into active. What does this tell us?
No, exactly. Active has been such a hot topic for the last several years, but if you look at the space, I mean, there's only about 300 billion in assets following active strategies. However, but I think it's more important to note that just because the majority of products out there in the marketplace are deemed passive, it doesn't mean that they're not being used in an active way around a core position. So, I mean, you look at the proliferation of the ETF marketplace, 10, 20 years ago, investors and advisors alike didn't have the ability to get creative with trying to create some of these satellite positions. And now you're looking at over or nearly 2,800 US listed ETFs. They now have the tools to tilt a portfolio one way or another based on their risks, their objectives, and it just, that hasn't been there historically.
Right. And Jay, thematic tech can be both active and passive, right? My perception is much of thematic tech follows indexes, although some, like Cathie Wood is a good example, would, for example, be picking their own at this point. So there is a distinction. Does this matter to you, active versus tech in the whole, passive versus active in the whole thematic business?
It absolutely does. The question is, where do people want to make that active decision? Do they want to make the active decision in allocating to the theme, picking something like robotics and artificial intelligence for 2022? Or do they want to have the active decisions being made at the security selection level, trying to pick those winners within themes? A lot of our funds are passive and index tracking, and we allow investors and advisors to use them as these building blocks in a portfolio where they make the decisions around which themes they believe in. But we also have an actively managed product that KEJI, it accesses Chinese tech themes, and it's actively selecting the securities that are best positioned there. So there's certainly room for both. It comes down to, where does the investor want to make that active decision? Theme selection or company selection within those themes?
Yeah, it's not easy to make that decision. I tend to think it's better, the old Jack Bogle in me it's better to follow a rules-based system than have an active manager. But that's obviously the core of this whole debate. You know, Alex, Cathie Wood is the intersection between thematic and disruptive tech and active management. So if you look at it, we just put this up, some of her funds have had some of the biggest declines for the year. She is active and thematic, really disruptive technology would be more accurate for her sense. Have investors seen some of this volatility all this year and said, you know, maybe that's not for me?
Yeah, I wouldn't say investors are necessarily done and completely out of the game when it comes to looking at some of the thematic active strategies. But I think part of it is thematics are still not fully understood by investors, and the fact that there can be increased volatility and there can be increased risk. That is what you're chasing when you're looking for above average returns outside of these passive broad-based indexes. So I wouldn't say they're necessarily out, but it's more important to have that plan in place, understand the risks that come along with some of these strategies before you actually, decide to pull the trigger and invest in them.
Yeah. And what about some of those risks, Jay? I mean, we're all seeing, Kathy Woods was catapulted into superstardom earlier in the year by making very bold bets, and everybody went along with her. I don't think anybody would disagree on the concept of disruptive technology really changing the world. I think everybody's bought into that idea. I don't think anyone disagrees with the concept, the philosophy around it. I think the problem now is what's the price people are paying, and obviously, this stuff, particularly a lot of stuff that doesn't make any money or doesn't have the prospects of making money several years down the road. There are times when it's appropriate to buy in and times when it's not. She has convinced a lot of people it was appropriate to buy in. Now people are debating what's the right price.
Well, I think the mistake that some investors might be making is thinking of thematic investing as only looking at technology. We see disruptive technologies as a big piece of thematic investing, but there's also trends being pushed by changing people and demographics. We have very powerful themes being pushed forward by the physical environment and our changing relationship with it. So just like we would diversify across asset classes, diversifying within thematic is key to avoiding some of these near-term risks. Actually, 2 of our most popular funds don't have very much technology in them at all. Our lithium and battery tech fund is mostly materials and industrials. And our U.S. Infrastructure Development Fund, our fastest growing fund this year, is mostly just industrial. So looking outside of tech in the thematic space, I think has been key for investors to find that diversification and not just bet on long duration tech sector.
Yeah, thematic, we say thematic tech, but you can have thematic without having tech in it, as you mentioned on infrastructure. Pot last year was a huge, this time last year, pot ETFs were all over the place and pot investing, and look what happened to cannabis this year. It's sort of, it's another shiny object that investors sort of moved on from at this point. They've had a terrible year. They're among the worst underperformers, and yet that's a thematic. It's not a tech thematic ETF. So there's my point, though, Jay. Some of this stuff will go in and out of fashion, and there's your Global X Cannabis ETF, POTX. It's sitting essentially at a 52-week low right now.
Absolutely. These funds are going to be volatile in the near term and hopefully grow in the long run. And what we really try to educate investors on is expect that volatility, be prepared for it, and really be thinking, decades forward with where this theme will evolve. We know cannabis is not going to be legalized federally overnight. We know robotics isn't going to be adopted across hundreds of warehouses in the United States overnight. These things take time. And because these are concentrated portfolios that can be sentiment driven in the near term, there's absolutely going to be volatility. So by diversifying across themes, diversifying across different areas, whether it's technology, whether it's infrastructure, whether it's people and demographic-led trends, I think that makes for a much more robust approach to thematic investing where we can weather these ups and downs in the near term.
Yeah. Alex, I note a lot of these thematic tech funds are down for the year. I could put up something here. You can see some of these big names here. It seems like there's a lot of tax loss harvesting opportunities out there. Do you think any of that is going on here? Here's some of the big funds that are down this year in thematics.
Oh, absolutely, Bob. You look at across the thematic space, you've got a couple examples up here, but there's nearly 100 ETFs classified in the thematic space that are down at least 20% year to date. And even more so when you look at the enormous amount of flows that went into some of these themes in January and February of this year when they were peaking. If you're not looking at your portfolio right now when you have some of these positions and taking advantage of the fact that you can take that tax loss, you can possibly reallocate, it's something you should be doing.
Jay, how do you address that theme? Do you think tax loss harvesting is a factor? We've been noticeably weak in some of these thematic funds in the last week or so. And frankly, even stuff that was popular, individual thematic tech that was big earlier in the year with the Reddit GameStop. GameStop is a good example here. It's down again today. It's near the lowest levels in many, many months at this point. To what extent does tax loss harvesting come into effect right now for some of these funds?
Oh, it absolutely comes into play. Tax loss harvesting is good portfolio management in a lot of cases. What I would caution investors, though, is that within the thematic ETF space, there's a lot of ETFs that sound similar but have very different holdings. There's about 6 robotics ETFs out there. The average overlap between those funds is less than 20%, though. So if you're selling out of one robotics fund and getting exposure to the next, just be very aware of what are the actual holdings you're getting in that fund, because it could be very different from what you have today. But absolutely, I think investors should always be considering tax loss harvesting, especially at this time of year. And the fact that we have more thematic ETFs than ever before gives investors more options, and ultimately that's great for the market.
Jay, you mentioned robotics that you're excited about potentially for 2022. What's the thing we haven't been thinking about? Is there something out there on the horizon, some new shiny object that's not quite gelled yet that you think could turn into a fabulous ETF in 2022?
Well, I really like the ag tech and food innovation theme. You know, we've already started to see it coming up as we think about climate change and droughts and wildfires and storms that are disrupting our food production already. On top of that, you have hundreds of millions of people entering the middle class in emerging markets, which is creating all kinds of new demand for more expensive foods like milk and proteins. And at the same time, we have these incredible advancements in technology that are allowing us to use drones in field management and crop management, autonomous tractors, genetically modified seeds that can be more resilient to disease. So I think we are about to hit an incredible inflection point in ag tech and food innovation as we come out of this pandemic and we reassess the supply and demand drivers of our economy at the most fundamental level, which is food and water that people need to survive.
Might we see an ag tech ETF from Global X in 2022? You seem to be. I'm trying to let you set something up here.
We already have one, Bob. We have Crop,
yeah, that's right.
We launched it this year, but it's still very early in this theme, and I think investors. It's not front page news, and that's a good thing because we're still able to go to supermarkets and buy the foods we want. But there's a world where that could be more challenging going forward.
Well, the wonderful thing about this game, the ETF game and thematics is we don't quite know. And the ETF business has set itself up to very quickly move into whatever is an area of interest for investors. We don't know what it is going to be, but it's going to be very exciting 2022. And I agree, technology is going to keep going. And I, for one, want a lot more of it. That's it for this week's ETF Edge. My thanks to Jay and Alex for a very interesting discussion. We've asked Jay to stick around for a few more minutes for the ETF Edge podcast portion of the show. And remember, you can see all of the shows on our website, etfedge.cnbc.com. By the way, that's it for this year's ETF Edge. We're going to take a break for the next 2 weeks. We'll be back January 3rd with a whole new year for ETF Edge. Everybody have a healthy, happy, and safe trading holiday season.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.